But let's now shift the focus to commodities. Manisha is here with us in the studios. Manisha, so what's your big headline this Friday morning?
Well, I'm absolutely looking at the gold prices because after being very, very strong and making all those headlines for most part of 2025, we're finally looking at some profit taking coming in. Well, the gold is trading at a 5-week lows. It's headed for a weekly decline of 3%. And this, by the way, is the worst weekly decline that we are looking at in last 6 months coming in for the gold prices. Also, when you look at the prices, the way they have come off, remember $3,500 an ounce was an all-time high. And from those kind of levels, we have seen the gold prices come off by nearly 9 to 10%. The low that the gold market saw yesterday was to the tune of $31.25. It's just about holding $3,200 an ounce in the Asian markets right now. Well, there are various reasons for the gold prices to come off. One, of course, is the tariff de-escalation, which seems to be weighing on to the safe haven buying there. It also is about the Fed rate cut expectations, which seems to be scaling back in sense of time and quantum both. And then it also is about rising U.S. Treasury yields, which is weighing on to the markets right now. The gold is also off highs because we're looking at CFTC data showcasing that many of the net long speculative positions seem to be now winding down. There actually are more shorts being created as well. And why not? Because you've seen the gold prices on a one-way rally from $1,800 an ounce since October 2023 to almost $3,500 on the higher side. So people have been holding those net longs and we are finally looking at some profit taking there. And speculators cutting their net longs has been on for 5 weeks now since the gold prices hit an all-time high there. They're down by nearly 30% from in the month of April on a month-on-month basis. And from where the net longs stand right now, this is the lowest since Feb 2024. So clearly, a lot of profit taking, a lot of money being pulled back from there. But it's interesting to see on how we've seen trading volumes for the month of April. They have been at a record $181 billion a day there. And also when you look at the ETF buying, well, we've seen 67% of a jump up in the month of April on a month-on-month basis. Well, markets do feel that going forward from here, it's not going to be a very sharp correction. Nobody's talking about 2,500 or 2,000 or going back to those kind of levels. That is because the U.S. chaotic tariff policies perhaps would just about continue. It also is about central bank buying. Every time you see the gold prices coming off, you will see those central bank buyings. And then portfolio diversification, inflation concerns, especially because of tariff and especially in the US, will support gold prices there. The global ETFs is something that you should be keeping an eye on. As I told you, the ETF buying for the month of April jumped up by 67% on a month-on-month basis. For the month of April, it has been the highest since March 2022 at around $11 billion. This is a global number there. But when you look at the Asian markets, and this is where the maximum ETF buying came in at around nearly $7.3 billion, which is the strongest on record. So while the speculators are taking money off, it is the retailers, investors, HNIs and ETF buying which seems to be supporting gold.
Okay, all right, got that. Manisha, thank you very much. So gold in sharp focus.